names. Piramal Enterprises sank on Friday. I mean, just completely collapsed. That is starting about 3.33% higher, just picking up some things from Friday's session. So 1703 on Piramal, large volumes as well. The other one is Muthoot, which sold off pretty aggressively early on and then recovered, but was down, I think, about 4%, 5% on Friday. That is starting above 1100 as well. That's about 1.6% higher. Other than that, I think Mahindra, of course, was mentioned. There are all these mid-cap IT names. Mindtree, which is up 3%. Coforge is up about 4%. We were talking about broking companies with a couple of guests on Friday. Angel One, for example, is starting 3% higher. That had corrected quite a bit in the fall. 3M India is higher by 14%, 14.5%. Volumes, of course, are thin. But, I mean, for that name, I guess it's coming up right on top in terms of volume-led gains. Affle India, which is, of course, on the digital advertising side, it's up 3.5%, 970. Oil India, we played out bites from the management, 4% higher, 226, and so on. So Route Mobile is another one which is starting higher at this stage. So that's the part of the market which is doing very well. Advance decline, I mean, overwhelmingly in favor of advances at this point in time. So it's a solid start, 185 on the Nifty, the Sensex with gains of 645 points right now. Harsha Upadhyaya is with us, Chief Investment Officer, Equity at Kotak Mutual Fund. He's our market master today. Harsha, great to have you with us here. Thank you very much for your time. Prashant this side. As a money manager, Harsha, how would you look at this reprieve, if I can call it that, in the market that we are seeing right now? Would you trust it to be more durable, or do you think there are still many risks which abound? Go on.
Good morning, Prashant. Clearly, we continue to remain a bit cautious on the markets. Yes, there has been a rebound, a very strong rebound from the lower levels, which is in line with what's happening in the global markets. But when you look at the fundamentals in terms of earnings season, which is going to be announced in July for the first quarter results, you will find that more or less most companies will have issues in terms of meeting expectations, according to us. So to that extent, we will not be jumping into just deploy all our funds when the markets are starting to make an up move. We will continue to remain cautious, look for companies which will have more resilience, even if things were to continue in this fashion for some more time in terms of more or less higher inflation and higher commodity cost pressure. So we will look for those pockets which will be able to withstand this kind of pressure and slowly and gradually build positions there.
Okay, the sector of the morning is mid-cap IT. But I mean, that's the one where we saw the maximum punishment, and whether this is just a bear market pullback or what, but at least in the near term, there's quite a bit of rally in Coforge, Mindtree, L&T Infotech, L&T Tech Services, Emphasis, all these stocks doing well. Harsha, good morning. How would you approach this pocket now after the sharp correction? Are these back in buy zone, or would you avoid them?
We will be a lot more stock specific in IT sector. Overall, our view on IT sector still remains quite cautious because we believe that most of these stocks are still valued richly as compared to many other pockets in the market. While all of these have fallen anywhere between 30 to 50% from the peak levels. So to that extent, a rebound is expected. But we would not be again going all out into buying some of these names at this point of time.
Hi, Harsha. Morning. What about the auto sector? You know, some of them went ahead. They pushed some price increases at the start of April towards the end of March as well. And now suddenly you have commodity prices that have corrected in a big manner. So the street is optimistic that maybe demand will be strong. The worst of margins as well is behind them. Would you go with that view? Would you look to buy some of these auto names? Go ahead.
Nigel, we are more positive on four-wheelers as compared to two-wheelers. Yes, the recent correction in metal prices will aid a little bit on the profitability side, but still there are many other structural issues which need to be resolved for this sector to become a really a strong sector, I would say. For example, demand is still hazy. I don't think it's that strong. And in terms of overall chip shortage, I think that issue has not been resolved yet. So yes, from the expectations of let's say 1 or 2 months back in terms of where the profitability was headed, there has been a reprieve, and clearly the commodity pressure is reduced at this point of time. But nevertheless, I think there are still a few negatives. So we will be very stock specific in this sector as well.
Okay, by the way, just look at India Cement. That's now your top gainer in the broader market, in the F&O universe. That's up about almost 6% thereabout. Harsha, any thoughts on this space? Of course, you won't talk individual stocks, but any name that comes to mind, or as a sector call after this big Ambuja deal, what would be your view?
Clearly, this sector has seen quite a bit of consolidation in the past few years. Already large 4 or 5 players account for the bulk of the overall capacity in the country. And the deal that has happened recently also points to the fact that there will be a lot more consolidation as we go forward. So from a medium to long-term perspective, it's good for the industry. But in the short term, just like many other manufacturing industries, this industry is also facing the brunt of higher commodity prices. So to that extent, yes, the immediate short-term profitability will be affected. But from a structural basis, we continue to remain positive on the sector.
Okay, Harsha, so what else is looking attractive to you? I mean, it doesn't have to be one large sector, could be pockets. Valuations have come off quite a bit, irrespective of what the broader market does, right? Because the Nifty is still trading at about 18 times 1 year forward earnings, which is not very cheap, but some of the froth, of course, has come off. But many stocks have come off quite a bit. I mean, now at 12, 13 times from the mid and small cap part of the market. So where are you finding opportunities?
In terms of sectors, we continue to remain positive on large private sector banks and industrials and chemicals. These are the pockets where we believe that if economic momentum continues, there is at least room for a positive re-rating of some of the valuations. We cannot say the same for, let's say, IT or FMCG sector. So to that extent, we prefer some of these domestic cyclicals in terms of our positioning at this point of time. As far as mid and small caps are concerned, clearly they have corrected as much as the large cap category as well. But if you look at 2020 and 2021, mid and small caps had outperformed large caps in a very, very significant manner. So to that extent, one cannot really say that all the correction is behind us. So to that extent, you will have to be a little more cautious on the mid and small caps. And also, whenever you see macro headwinds, usually this is the pocket which struggles a bit as compared to the large cap established names. So that bit of cautiousness is still warranted.
Harsha, what about the chemical space? Specialty chemical stocks as well. Anything that had anything to do with that in the last 24 months? Well, you saw big returns. Some of these stocks, it appears they've run ahead of themselves. Your view on the space?
Clearly, in this space, the valuations have run up quite a bit, but we continue to be quite bullish because the growth rates have been significantly higher than the market growth rates. The margins have been continuously moving up. There has been quite a bit of capacity additions that are happening, and as soon as the capacity comes on stream, that's also getting used up. So clearly, the overall space continues to have very strong business momentum. And as we were all looking at China plus one opportunity for this sector, I think that's clearly unfolding now, and at least some of the large established specialty chemical names are significantly gaining because of this particular opportunity. So we continue to remain bullish, but as compared to, let's say, as you rightly mentioned, a couple of years back, the valuations have moved up. So one needs to be conscious of that fact as well.
Okay. Harsha, I just want to understand, this is one question which a lot of people keep asking me to ask fund managers, is that, we've seen so much FII selling and DI is almost buying same amount every day. So why are they providing exit opportunity to the FIIs? Just your thoughts.
Anuj, it's not that domestic institutional investors are doing something which is very unusual. It's just that we are continuously been getting inflows. There has been a lot of domestic retail interest that's still continuing. So as long as the money is coming in and which is for long term and which is based on asset allocation, I don't think there is a problem. And we are deploying that on a gradual basis. So it's not that we have been putting money from somewhere else, right? I mean, it's finally end of the day, if the investors are putting money into funds, we have no other way but to go and invest. And clearly, this has not been a short-term phenomenon, and investors have been building their portfolios through systematic investment plans for quite a while now, and that's something that should continue because if you look at India from a 3 to 5 year perspective, clearly Indian earnings growth is likely to be in the reasonable mid-teens, I would say. So in line with that, and if valuations hold up, then equities can still give you very, very handsome returns. So that's what most retail investors are betting on. And that money is getting deployed on a gradual basis from mutual funds, I would say.
Harsha, any thoughts on textiles as a space? I know it's a small sector, relatively very small sector, but do you own any names there, and what's the story looking like there?
We do not have much position in the segment. As you rightly mentioned, it's one of the smaller market capitalization sectors and also not very liquid in terms of opportunities. So to that extent, we have only a couple of names, and we will look to remain in those names as of.
Okay, Harsha, we'll leave it there. Thank you very much. Appreciate you joining in.